That's why I have you back now on the African scene. The International Monetary Fund's Executive Board on Monday approved a 3-year, $406 million US dollars extended credit facility arrangement for Mozambique, with about 91 million US dollars available for immediate disbursement, the fund said. The facility is the Southeast African nation's first program since the global lender suspended support 6 years ago. The IMF said a 3-year arrangement would help support economic recovery and policies to reduce public debts and financing vulnerabilities, while creating space for public investment in human capital, climate adaptation, and infrastructure. The fund said the program will support a reform agenda centered on establishing a sovereign wealth fund to manage the country's liquefied natural gas wealth, mobilizing tax revenue and strengthening public finances. And now, Egypt's annual inflation rate continues to surge amid Russia's ongoing war in Ukraine that has shaken the global economy, the country's Statistics Bureau announced Tuesday. The inflation rate was up 2.8%, reaching around 14.9% in April, up from 12.1% in March, the Central Agency for Mobilization and Statistics said. The hikes are driven by Russia's war on Ukraine, which ratcheted world markets and caused oil prices to soar, threatening food supplies and the livelihoods of people across the world. Food and beverage prices increased by 8.1% in April compared to March. Prices of bread and grains increased by 3.6%, while housing, electricity, and energy prices increased by 1.1%, the data has shown. The higher inflation has inflicted heavy burdens on consumers, especially lower-income households, and particularly for everyday necessities. Nearly 30% of Egyptians live in poverty, according to official figures. And on the foreign scene, from California to Texas to Indiana, electric grid operators are warning that power generating capacity is struggling to keep up with demand, a gap that could lead to rolling blackouts during heat waves or other peak periods as soon as this year. California's grid operator said Friday that it anticipates a shortfall in supplies this summer, especially if extreme heat, wildfires, or delays in bringing new power sources online exacerbate the constraint. The Mid-Continent Independent System Operator, which oversees a large regional grid spanning much of the Midwest, said late last month that capacity shortages may force it to take emergency measures to meet summer demand and flagged the risk of outages. In Texas, where a number of power plants lately went offline for maintenance, the grid operator warned of tight conditions during a heat wave expected to last into the next week. The U.S. Securities and Exchange Commission on Monday extended until June 17 the period of public comment on its landmark proposal to require U.S.-listed companies to disclose a range of climate-related risk and greenhouse gas emissions. Gary Gensler, who heads the agency that regulates Wall Street, said the SEC extended the deadline in response to significant interest from a wide range of investors, issuers, market participants, and other stakeholders. The initial public comment period on the proposal is set to expire in this month. Prominent Republicans have accused the SEC of overstepping into authority with the proposed rule. The U.S. Chamber of Commerce Business Group has vowed to find part of the plan. The agency also reopened for 30 days its public comment period on separate proposals to boost private fund advisor disclosures and to expand treasury trading platforms. Corporate groups have criticized Gensler over the agency's initial 30-day comment period windows for these and other measures, saying the comment period was too short for offering opinions on such ambitious rule changes. And in the stock market, the U.S. stock index futures climbed on Tuesday, with investors buying into beating down banks and mega cap growth stocks after a 3-day sell-off on fears around tighter monetary policy and slowing economic growth. Apple Incorporation, Microsoft Corp, Meta Platforms, Amazon, and Google, Owner, Alphabetic Incorporation, and Tesla Incorporation rose between 1.2% and 2.5% in pre-market trading. Gold Sachs, a group added about 1.3% to lead gains among the big banks. On Monday, the benchmark S&P 500 index ended below 4,000 for the first time since late March 2021, and the Nasdaq dropped more than 4%. Both the indexes have dropped about 16% and 26% respectively this year due to the war in Ukraine, China's COVID-19 lockdowns, roiling global supply chains, and rising bond yields as traders adjust to higher U.S. interest rate.